Hey, welcome back. This is my second episode today, and today is April 5th, Monday. And on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets. Before diving into Elrond, EGLD, USD, and see what has gone on in here, I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculations and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you have any questions or comments, please only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what has gone on since my earlier post today. I don't think much has changed. Bitcoin dominance, first thing I look at, tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today we have Bitcoin dominance down over 1%. This breaks down to Bitcoin price action up over 1%. Total altcoin market cap up over 4%. Now this is the upside of Bitcoin dominance trending downwards. I would usually see total altcoin market cap leading in gains ahead of Bitcoin price action. I usually emphasize Bitcoin dominance trend downwards. That's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, the upside of that, I would usually see Bitcoin leading in gains ahead of total altcoin market cap. On the weekly time frame here for Bitcoin dominance, still my focus. We have made a lower low yesterday since yesterday's weekly candle close at about that 58%. Okay. It did pick up some steam, in my opinion, there because it did breach that key support level I was talking about, the weekly 200 MA, at about 59% there. Okay, I don't usually see resistances or supports being broken on the first time, so that was an unusual case. Right now, the level I'll be comparing this new candle to would be comparing to the last low here at about 58%, the week of September 7th, 2020. Because of that low RSI reading I am looking at right now at about 27. Now, this level is important because it could still present bullish divergence here, okay? Because we're right now at about 34 still, so still quite some way to beat that RSI reading of 27, even though we have a lower low here on the price action chart. I am looking for that lower low on the RSI to actually negate bullish divergence. If Bitcoin dominance continues downwards here, that's more ideal for the altcoins overall, as opposed to if it gets a bounce and possibly changes course and go back upwards. Let's go over to Bitcoin. Still bearish divergence playing out here on the weekly time frame. We did get 2 consecutive higher highs here and 2 consecutive lower highs on the RSI. That's still classic bearish divergence. And as I've been saying, the safer signal I am looking for to tell me that this bearish divergence is done playing out is a higher high on the price action chart along with a higher high on the RSI. The last RSI reading to beat is about 75 here. Okay. Monthly time frame. We have been having bearish divergence for quite some time, still has yet to play out. This monthly candle is still pretty early to talk about, so not something I'll lose track of because we are in overbought territory with bearish divergence comparing this high with this high. Okay, we have been having bearish divergence for quite a few months, has yet to play out, but not something I'll lose track of because do take a look into the monthly time frame here and see what happens every time Bitcoin gets into very overbought territory. Daily time frame. Key resistance 60K. After that, 62K from past trading history. Key support, which has been holding up the price action for quite some time. Daily 21 MA, the blue line. If that does not hold, daily 50 MA, the white line. Let's go over to Elrond. See what has gone on since last time. Let's take a look from the monthly time frame down to the daily and see if we have any overbought RSI readings or possible bearish divergence scenarios. Elrond on the monthly time frame, we're currently about 93. That's 93 out of 100. So in very overbought territory. Weekly time frame here, we're currently about 79. So still in overbought territory here on the weekly time frame. And we are getting bearish divergence right now from last week's candle close. Okay. New high, higher high. However, lower high on the RSI. Okay. Now, a confirmation, a safer signal here that tells me that this bearish divergence is done playing out. I'm looking for a higher high on the price action chart along with a higher high on the RSI. If not, the conservative estimates whenever I do see bearish divergence on a specific time frame is that it could decline back down to the next closest moving average. In this case, would be the weekly 21 MA, currently at about $84. Now, if there are enough buyers in this market, it could potentially hold this price action up and not let it fall all the way down to this moving average. Or, if there are enough buyers in this market, but not enough to continue pushing this price higher, they could potentially consolidate the price action and wait for this moving average to come up further. Okay. Or if there's just not enough buyers in this market, it could potentially drop all the way down to this moving average. So some hints I'll be looking for to see which scenario is likelier to play out. Three-day time frame here. Price action. Let me mention the RSI reading first. We're currently about almost 69 here. So not in overbought territory. However, there's also bearish divergence as well. I'll be comparing this high with this high right here. However, still lower highs on the RSI. Looks like the price action is trying to keep going. So I am looking for that signal there, like I mentioned on the weekly. If I get a higher high on the price action chart, along with a higher high on the RSI, that would tell me that this bearish divergence is negated. So the higher high to beat, the last high RSI reading to beat here is about 71 comparing to this high. Okay. Also, when price action does close, which closes in about a day here on the 3-day time frame, I'll also look out for this high to beat as well to negate bearish divergence, which had a very high RSI reading of 94. Something to be looking out for, in my opinion. Daily time frame, we're currently at about 64. And we do have bearish divergence comparing this high with this high. And there is also bearish divergence right now. Okay. Very similar thing about what I said on the 3-day and the weekly about negating bearish divergence. A safer signal to see if bearish divergence is negated. Otherwise, that conservative estimate, whenever you see bearish divergence on a specific time frame, I would say it still applies here. Now, aside from that, let's take a look on the 3-day time frame, where I can see a more consolidated symmetrical triangle pattern that I talked about last time. Okay. Price action consolidated for quite a bit within the symmetrical triangle pattern. Now, symmetrical triangle patterns are, according to Thomas Bukowski and his website, thepatternSite.com, it is a 60% chance of a breaking to the upside. Looks like we have already broken to the upside here. Okay. So I'll adjust it for this breakout point. That will give me approximately, let me see if the measure target is readable here. As far as I can read it, it's over $264. Let me take a more exact measurement here. Top of the pattern will be $225, excluding this outlier wick. bottom of the pattern, let's just say $90 for easier math here. Okay, slightly under $90, but I'm gonna say $90 for easier math. So 225 minus 90 will give me about $135. Adding it back on top of, let's just say $140. Okay, for even sake. That'll give me about $275 measure targets. Correct me if I'm wrong with the math there. Now, measure targets are theoretical approximate targets only. May actually be different in real life price action, more or less. Let's take a look into some key supports and resistances relevant to this price action right now. Immediate resistance here would be about the $180 fib level area. Okay. It looks like we are trying to get above this resistance range where I do see quite a bit of wicks coming from previous history here, from previous trading resistance here. Okay. I think the next one up is about 175, slightly under to $180. I could expect quite a bit of resistance between this range. Okay. After $180, I could expect $220 to about $240 range coming from these two wicks right here as well. Possibly at a $200 perhaps. Okay, let's see if we do have any wicks on a lower of the macro timeframes here. We do have one wick around $200, so I do expect some resistance as well. Now that'll be the lowest of the macro timeframes I will consider here for resistance. Let's take a look into the key supports. $150 fib level area. The 3-day 21 MA currently about $140, which is also the blue line here. The daily moving averages are actually right underneath, right at about $140 as well. So those are going to be some key supports. So we do have quite a few key supports at about the $150 to about $140 to $150 range there. Okay. If those do not hold, possibly $120 fib level area. Okay, and the weekly 21 MA is way far behind there. So let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action continues this breakout and go towards its measured targets, mining some of the resistance levels I have just pointed out. Now, even though we do have a bullish breakout here, I would still not lose track of some of the bearish signals I have mentioned on those higher time frames. Okay. And perhaps even the hints I will look for and see if those bearish signals are actually playing out. Okay. Bearish case scenario. Price action breaks the immediate support of about $150 fib level area. The next level of key support would be the 3-day 21 MA, currently about $140, along with the daily moving averages, also between $140 to $150 as well. If those do not hold, I'll be looking at the $120 fib level area, which would tell me that this breakout is reversing. Okay. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I'd love to hear them. Hope you match your risk carefully, and if you'd like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.